Quick context, this was recorded March 28th and 29th, so a couple weeks ago at my live event, saasopen.com. We had 1,000 software CEOs there. If you missed it, we hope to see you at the next one, September 5th and 6th in New York City, saasopen.com. But for now, let's jump into the recording.
I think over the next 20 minutes, I'm going to talk about what are the drivers for this acquisition to happen. How did it come through? What went well, what did not go well, what mattered to the team, both in terms of emotions, egos. Now you have founders on one side, you have the investors on the other side, and then you have operators like me on the other side, right? So obviously, it's a very interesting dynamic that has happened over the last few months. Quickly, a quick background about me. So I've been in SaaS for maybe 15-20 years, mostly as an operator, self-financing and selling for companies. So I started off as an executive at a growth equity fund called Camber Partners. You might have seen some of those teammates like Justin or Will around. So we had a thesis and we started to look out for a bunch of companies. I think personally I looked at 150 companies over the last 6 months, and I think Beamer was a company that kind of really stood out in its own definitions. One, it was led by 2 founders, it was bootstrapped, it has grown itself to being few $1 million of revenue without any external financing, led by a very international team between Spain and States. And we decided to make an offer and acquire them. So we made an acquisition of Beamer. But that came with its own challenges, right? So Beamer has been a tool predominantly serving a lot of SaaS product teams and marketers. That was around August 2023. But Beamer is a very successful product, but it has come to a point of its own inflection, right? As you know, in tech markets, things change very, very dynamically. So what was a successful product at some point started to get featureized in the landscape. So couple of things. One, there was a call for higher growth. So historically, Beamer has been growing around 20-25%, works well in a fantastic bootstrap setup, but doesn't work for venture investors or even growth equity investors. So there was definitely a call for higher growth. Hey, how do we grow the business at a higher rate, right? So that's definitely one inflection moment. I think the second thing is, as I kept during the due diligence process of Beamer, I kept speaking to almost 120 customers of Beamer, and there was a lot of common synergies. Is like, hey, you guys offer release communications or launch communications, but do you also offer onboarding? Do you also offer guides as a capability versus just ability to release products or update users? So there were at least 70% of the customers came back and said, hey, can we have a better guides product? So there was also the need from the customer side, right? I think most importantly, when we start thinking about M&A or something, we wanted to have a clear checklist in terms of what matters to us and what matters to others. The most important thing is, hey, is this a complementary product? What do I mean a complementary product, right? Complementary product means we want to keep the same ICP, like we don't want to change the ideal customer, but we want to offer him an additional SKU, right? That's where I think during these customer conversations, guides was a very common feature. So complementary product, definitely it has to check mark. Second thing is the audience wise. As I said, Beamer historically has been selling to about 2,000 plus SaaS companies, predominantly focused on product teams and product marketing teams. So we didn't want to shift away from that audience. We don't want to build a tool for sales teams or the HR teams. So we want to stay focused on that audience, right? Third is the business has to be profitable. So Beamer historically has been profitable since day one as a company, although it was strongly held by the founders. So we definitely wanted the business to be more profitable as well. Finally, bootstrap, it mattered to us because if the cultures were very similar, if the growth evolutions were similar, not a lot of venture investors at the table, it would be much easier for us to even finance and make the transaction happen. And I think Beamer historically from day one had a product-led growth model. We didn't want to acquire a company which has sales as the primary driver, and also the go-to-market was also a big focus area. And lastly, it was about customer centricity. Does the customers truly love the product? Do they have a strong retention? And is there a strong word of mouth among? I think we wanted a target that check all the boxes. And I think we found a couple of companies in the guide space, not just in the States, but internationally, which checked all these boxes, targeting the ICP, bootstrap, go-to-market. Sometimes we had to be flexible enough to extend that bootstrap to say, hey, if they're relatively less venture backed, haven't raised a lot of money, but if they've raised probably $1 million, $2 million, that still is an acceptable option, right? So we started off with an option. We met a company, we dated, we went all the 9 miles, and the day we are able to sign the term sheet, the marriage broke. So it's just the very day, when we were able to sign. So we spent like 3 months going through the diligence, talking to their customer, flew internationally and met their team, met their investors. Their investors were also convinced everything was coming together, and it's almost a 4-month effort from my side and their side. Again, they also have spent a lot of time, etc. Unfortunately, the marriage did not happen, right? So that was a big shock for us because we spent so much time, and most importantly, I think the legal bills weren't cheap. As you know, that itself ran up to $200K. But then I think, like as folks say, there is success in failure. I think then at the close heels of losing someone, I think we were resilient enough to bounce back and find someone who is a better ideal match. So I think the hope is that M&A is always a probability game. So in case if you don't find someone, it doesn't mean that's the end of the world. So you quickly bounce back and find someone else. And we found an ideal match. But I think that was the interesting piece. So when we reached out to this company called Userflow, that was Isben, one of the founders, and a very respectable name in the PLG space. So he said, if you look at the subject line, the subject line is need an onboarding solution, right? It probably sounds very desperate from saying that, hey, we lost a deal, we need a deal right now, right? So this was one of our investors, Scott, and I think in 5 minutes the founder replied, say, thanks for your email, we are 100% bootstrap and we plan to stay so. So they're like, hey, yes, it's a great ideal match, but they didn't want to get into this marriage, right? And then there's a couple of events. So I think what I would ideally say is if you're driving M&A, the best thing that can happen is an operator talking to another operator, like a founder talking to a founder or a CEO talking to a CEO. I think that's the best momentum. So I've told my investors, maybe you should stay in the back seat. Let me see how this conversation go. Right? So I reached out to Isben. Again, his answer was pretty much no. I said, that's fine. Let's go and meet. So I had to fly down to San Francisco the very next day. And I said, I'm going to wait in this bar until we meet. Right? So I think the first half of the day he didn't turn up, but in the second half of the day he did turn up, at least for a coffee, right? So I thought, what is there to lose? So we sat, we kept talking. I think around 8:30 or 9ish, I think we had a deal on the table. So I think the point I was trying to make is it's always best if this CEO to CEO conversation can happen or a founder to founder conversation can happen. It's very different when an investor is in the mode, right? So yeah, I think second time we could have hit a roadblock, but thankfully this time around we were able to turn around the ship. And just a very quick summary about Userflow. And I think my first conversation with Isben, he's a very direct person. He was a very successful founder with a company he built in the past called Cobalt. He was very clear, we have no reason to sell. Why? They were at 4.5 million ARR, 50% profit, growing 50% year on year, 100% PLG, 3-member team. And they had no reason to sell. I think that was his direct answer. I have no reason to sell. I don't want to waste your time. I don't want to waste my time. You can fly back where you came from, right? I said, that's fine. That's fine. So we kept talking. Finally, I think we were able to convince him. And, see, I think the piece I told Esben is, hey, Esben, it's great that you guys build a business. What are your vision for the business, right? And he articulated me the vision for the business. And I felt there are clear gaps in his vision, right? Because he was trying to take the product either in the support direction or other direction. So I felt there are gaps in the vision. That means that at some point you are going to falter, and at some points you're going to sell. So if you're going to sell 2 years later, why not sell now, right? So I think there was a lot of interesting conversations, and I think I was able to drive a couple of these conversations well, because I was on the sell side 4 times before as a founder myself. This time I was on the buy side. So the mental model was very interesting for me, because I was on the sell side multiple times before. This is the first time I was on the buy side. Anyway, I think it's great that we are able to partner with it. But it's an incredible business. I think through our discovery, we found out that they had the best onboarding and the guides product in the marketplace, which was phenomenal. That was very consistent across all the customers that I have spoken to in terms of due diligence, right? Because how could a product with just 3 people in a very short time frame of 4 years could get to this level of ARR without financing? I think the product speaks for itself. Yeah, I think we spoke about some of this trajectory. They started off in late 2019. They launched the product in early 2020. Since then, I think the trajectory has been pretty fantastic for them. Some very, very credible logos. I think these are the 3-member team that I was talking about, Esben and Sebastian. They are the founders. One of them based in States. The other rest of the team is based out of Denmark, which is where some of the successful companies like Zendesk has come. So finally, we are able to get the Beamer and the Userflow marriage together. So it's a happy ending, I would say. I think in our next step of the journey, right? I think the post integration, probably the business drivers drive a lot of these things. How do you scale? How do you integrate the team? How do you scale the product? How do you scale the go to market? Those are some of the challenges that we are going through. But pretty interesting stuff so far, I would say, right? I think what we have learned through the process, right? Beamer has been, a very different product serving its own audience. The common synergies are both companies have, a SaaS, majority SaaS customer base. So we have about 4,000 SaaS companies that we serve globally between both the products. Historically, very product led, very customer focused teams, and run by a very, very small teams, right? I think M&A is a game of probability. As I mentioned about the first time, we almost came close, and we were in a room the day of signing when the other founders decided to walk away, right? All due respect to them, they have their own reasons, but it was also an emotional turmoil for for us, for the investors having spent so much time. So it's a game of probability, so you got to live with it. I think the main thing that kind of worked in our favor for the second time is when you keep asking these questions to the operators themselves. Hey, what's your vision for the product? Where do you see it 3-4 years? Usually when the investors come in the room, their first focus is on financials. They are like, hey, give me your P&L statement, give me your balance sheet, give me your how does your net retention look. All of those are important. But I think when the operators talk to other operators, I think the emphasis should be more on, hey, what's your product vision together? Are we serving the same customers or a different customer base? How do you see the market landscape changing? Is there a synergy for us to come or not come? I think that debate, that healthy debate should happen between both teams, and how do our customers benefit from it? So one of the things we did during the diligence is we looked at the combined customers. Funny part is we had almost 15% of customers that were overlapping both the SKUs. So we went to all of them and had very detailed conversations. Hey, what do you use Beamer for? What do you see? Do you feel good about this marriage, or how would you feel? So we did a lot of that due diligence, which really helped shape our thinking as well. So that's a good exercise. So I would say lead with product vision and focus. I think culture plays a very important role, especially if you have distributed teams working in different time zones and how they have started. So we had teammates in Spain, Denmark, Canada, and Argentina, etc. So the question is, culturally, are we aligned? Have they grown the same way? Have they been financially disciplined enough to operate in business? I think in that way there was a lot of synergy. Had we been a massive venture-backed business that acquired a bootstrapped business, culturally, I think it would have been a bit more challenging to have the founders stick around, right? And the other thing is, go-to-market motion, right? I think the key question is for us, hey, post-close, are we able to continue on the same go-to-market motion, or should we have to start a new go-to-market motion, right? Thankfully, both companies have historically been majority on the PLG side, with only one of the founders doing some level of founder-led sales. So it's not we didn't have sales-led motion. We had something like a basic sales assist that the founders were themselves able to do as well. So in that way, the marriage came together. So these were some of the lessons learned from the process. Sorry for that crude graphic, but yeah, that's pretty much it. Yeah, thank you so much. Yeah.
Hey folks, if we haven't met yet, my name is Nathan Latka. I launched and sold my first software company back in 2015 and went on to write a book about it, which you guys made a Wall Street Journal bestseller, purchasing over 30,000 copies. Thank you so much for that. After the book, I launched this show and went on to create founderpath.com. I raised a large fund to do non-dilutive deals with B2B software founders. So far, we've invested in over 400 software founders, totaling $150 million. Here in 2024, we're doing 3 to 4 new deals per week. So if you're looking for capital and don't want to give up equity, go sign up at founderpath.com for free to get your offer.